Welcome in, welcome in. We are back for another weekly outlook. Markets look ahead. Make sure the audio is good on my end, and we'll get right down into the business here. Welcome in, welcome in. We are back. All right, pretty good. Not too much delay either. All right, guys. How we all doing today? Happy Sunday. Hope you guys are all doing well. Hope you guys had a good weekend. Thank you, Cleo. Happy Sunday. Major, hello, hello. Slim, Joe, glad to have you guys. Hello to you guys. Unicorn Queen, happy Sunday. Happy Sunday to you, Frank. Lucid, what's going on, my man? Alrighty, guys. Well. What a dump that we got on the indices last week, huh? So for those that violated the number one rule of trading, trying to call a bottom in a bear market, you guys know that never works out, right? So hopefully, hopefully you guys were on the right side of things last week. Pretty straightforward read last week for specifically for indices. Looking for lower prices. Before we get that, we want to see a Judas swing into a premium, and then market makers are going to rip it to the downside. So pretty clean textbook delivery last week, and looking for more continuation of that this week, and we'll get into all those details. Going to look to keep this one short and sweet. I may take a few questions at the end, but I got a pretty full schedule here this Sunday, so I'm going to look to more so to share my analysis. If there's any questions that relate to what it is that I'm covering, or maybe some clarification, we'll be more than happy to provide that. But for today, it's going to keep it to the point and get through what it is that I have to share here with you guys today, covering what opportunities I'm looking at. Finally, we have bonds moving in sync with dollar, which create trading opportunities that I like in euro and pound. Not that I'm trading the Forex market. If I do trade those markets, I will trade them through the futures market. I haven't really recently. One of the things I frequently say and that I'm a firm believer in is that you only need one market to make a killing and more money than you'll ever need in a lifetime. And that can be achieved with just one market. As your skill set grows and you're able to diversify your attention and trade different markets, that's something you can do. But it just depends on the level at which you're doing analysis, right? Because if you're really drilling into top-down analysis, focusing on all the factors that we use for high probability trading, it's really difficult to do that across 5-10 different markets, right? So that's why I'm a firm believer in having focus on a few markets. But since I'm already looking at dollar anyway, it's not too much of an inconvenience for me to trade the other currency pairs. So just something I figured I'd throw out there. Let's go ahead and get into the business here now that we got clarity on dollar, bonds, NASDAQ moving. We got a lot of opportunities coming this year, and we absolutely slaughtered the market, put the beat down on it last week, and we're looking to do the same here this week. So pretty straightforward read last week. Easy money for those of you guys that were locked in, paying attention. And again, we're suspecting the same in the coming week here. So let's go and get into the US dollar here. We called this weekly fair value gap for the market to trade up into that in the previous week. We did. Also extending this inversion fair value gap through, you'll see we hit that, and we got a nice rejection. So the fact that we're leaving the upper half of this weekly fair value gap open is signaling that we're looking for lower prices. Kevin, happy Sunday to you. Adrian, hello, hello. The fact that we're leaving this weekly fair value gap open is not only signaling the market's bearish, but it's really heavy. So my attention goes to the sell side here, and then we have this imbalance here below market price, then this imbalance, and I do suspect we will get all the way down into these equal lows here. I'll cover why when we get into the daily chart. Alrighty, let's go ahead and smooth that over here. Let's bring that over here. All right, so looking at the daily time frame here, you guys may be already ahead of what it is I'm looking at. But you guys are probably seeing this market maker sell model here. Now that I have a few measurements, now that the price range is being delivered to us, I'm able to forecast the rest of the price leg, and I'll get into a little bit of those details here. Don't want to make this a 3-hour teaching though. So we're seeing the breakdown. We're seeing clear bearish order flow, right? Imbalance here. Respected, old high taken out, aggressive breakdown, creating 1, 2, 3 fair value gaps. When that's the case, you're seeing extreme weakness. We want to see the upper one be a breakaway gap. We more specifically want to see it be a breakaway gap because it's at 25 to 30% of the anticipated price run to the downside. 50% of the anticipated price run is our measuring gap. And the fact that we left that measuring gap open is exactly what you want to see as a smart money trader. So we're going to be looking for lower prices and for the rest of the market maker model to complete. I particularly like last week as well with that weekly inversion fair value gap, extend that through. We traded up into that, and you'll see the market stayed in the lower half. So I'm suspecting we're going to see continued acceleration on the downside, take out this daily low, that weekly gap, these imbalances here, and then get all the way down into the 100 big figure number. Dropping down into the hourly time frame, so you can see how these levels come to life. So we have that. Let me show you guys so you guys can refer to it. So that daily fair value gap in red, that's the red rectangle, and then the yellow what would you call that? Yellow, orange, creamsicle? We'll call it yellow. So the yellow rectangle that's in there, that's that weekly fair value gap, right? So again, make sure you're keeping the levels organized here, top down. So last week, consolidation, this is the accumulation phase of the weekly range. This is the Judas. They take it into a premium for smart money to do what? To sell short, right? So they're selling short inside this daily fair value gap that I gave you guys as the draw. And then we let the market show its hand inside these premium levels. I say that just about every single week. I still get a lot of questions as to what that means. And the key is understanding order flow and market structure. When I have a key level that I'm looking for, and I'm wanting to see, are we going to continue up through it or are we going to turn at that level? I'm looking at market structure and I'm looking at order flow. What does that mean? Well, here we have a swing low that's taken out. That's a shift in market structure. That pattern in and of itself means nothing, but it does mean something in the context of we're trading higher. That's the Judas swing of the weekly range. We expect the high of the week to form Tuesday into Wednesday. Tuesday into Wednesday. And then when we get those clues in the market structure with time and price aligning, time being Wednesday, Tuesday, we expect the high of the week. Price being that daily fair value gap that I gave you as a draw last week. And then we just let the market show its hand. What do we get? 3 fair value gaps. I already covered that, signaling weakness whenever you see that. So aggressive breakdown, then we see what else? Fair value gap here, down close candle, and this fair value gap all traded to and through. So the market structure is shifting, trading through the swing low. But now we have the order flow shifting with 3 PD arrays violated and closed below, which is signaling to me that the algorithm is now no longer in a buy program, that it's entering a sell program, right? And it's not doing it from a random level. These very specific premium arrays that we were looking at last week. And then you see the fair value gap after the shift in market structure. That's the good old ICT 2022 model, right? Buy side taken, breakdown, shift in market structure, fair value gap. We're looking for lower prices. That's why on Thursday, when we were live, mentorship group, we were looking for lower prices here into these equal lows. And then that's why on Friday, when we were actually live on the YouTube, we were calling lower prices for sell side here and sell side here. And those are all the things that go into that. Of course, in my pre-market analysis, I can't give you guys a 10-minute breakdown, but those are things that are going on behind the scenes in my analysis, my team's analysis, as to how we're able to predict and forecast these price movements. So I was able to give you lower prices on dollar from this premium level, which of course makes it easy to go in and buy euro and pound as long as you have a model and you know what you're looking for. So I'm looking for continued downside. I like how we respected that fair value gap, left this one open. So I'm looking for the market maker sell model to complete and then for us to attack the original consolidation down here. So that's what we're looking for in dollar. Now let's go ahead and confirm that with the bond market. Let's go up to the weekly chart. Let me refresh these here real quick. All right, so what we've been watching on treasuries is this weekly fair value gap here. The market dropped down into that. So I was bearish last week on bonds because of the market structure that we're seeing. It ended up giving a nice expansion to the downside. Ended up seeing a nice expansion to the downside, but then we saw what? Support inside that gap, right? So that's signaling what? Strength, bullishness. Also, the fact that I'm looking for lower dollar, I want to see higher treasuries, but we haven't been seeing that correlation at least the past few weeks. Now that that correlation's back, it's going to make for a lot easier, less manipulated trading. Because one of the things that you want to look at with currencies is you want the respective bonds moving with intermarket analysis. There's a word that's slipping in my mind. I'm thinking what it is. Symmetrically. We want to see the intermarket analysis be symmetrical, right? Meaning dollar lower, we want to see treasury bonds higher, because then that means if the treasuries are trading higher, yields are going lower. Yes, less yield for dollar. Money's coming out of the US dollar, lower prices, right? So weekly fair value gap finding support. So looking for this weekly swing high here, and then through that, we'll have this imbalance here above market price. Alrighty, daily chart. Benson, never missed the market look ahead and pre-market reviews. Thank you. Yeah, appreciate you, Benson. Thanks for the support, my man. Glad it's helpful. So now dropping down into the daily chart, right? We saw the market drop. If you look at this here, one of the reasons why I was looking for lower prices was because we have a dealing range here. Right, dealing range low, dealing range high. I was looking for the market to drop down into a discount. Once the market trades down into a discount, I wanted to see what feedback the market gave me. Well, what did it give me? We got an SMT and this weekly gap here. The market's finding support there, right? So we see weekly fair value gap, the market dropped down, took out the sell stops here, and then we see an SMT divergence here inside of the key level. I was actually putting together a presentation here yesterday for the mentorship group on SMT, and this is just going to be another example of it. The way I use SMT is I need to have a key level that I'm looking for. Meaning, well, what's a key level that we're working in here? We have this weekly, and I'll also show you how that allowed me to call the high of the week last week on indices as well. So don't let me forget that one. So we have a key level here, which is the weekly fair value gap. If I'm looking for higher prices, or if I'm seeing how we trade there, then I will look for, in the lower time frames, a SMT divergence. Because what this is communicating to me is that this is a run on stops. This is heavy accumulation of long positions because it couldn't make a lower low inside of a weekly key level where we're already expecting a reaction. So you see how within that context, SMT is really powerful. But if you're just looking for SMTs up and down, there's actually a bearish SMT here as well. So SMT in and of itself is going to confuse you because there's SMTs up and down all day long on all time frames. But if you know what you're looking for, now SMT becomes a very powerful tool that you're able to use as confirmation. So bullishness from that weekly fair value gap, looking for higher prices, thinking we're going to get to the external range liquidity here because we just traded to the internal range liquidity. Again, looking at the range low, range high, market dropped down into a discount, and then a nice displacement out of that discount valuation. So I suspect we'll likely take out that external range liquidity and trade higher. Why is this important? Because if I'm looking for lower dollar and higher foreign currency, then that is going to support that with the bond market. Yeah, so that's about it for bonds. Let's keep this moving here. So weekly chart for NASDAQ. So last week we were looking at this weekly gap here. I was looking for this gap, and I remember I stated this in very plain black and white terms. I'm not looking for the gap because I'm bullish. I'm looking for the gap to trade into as a short-term premium for the market to then continue selling off, right? Big difference there. I wasn't calling a bottom. I'm saying the market's going to gravitate into this weekly imbalance, build in a premium market for fair value for market maker selling, for the market to then continue taking out the downside. So I really liked how we traded up into that gap, and then what did the market do? It stayed in the lower half. It couldn't explore the upper half of that gap. That's exactly what you want to see if you're bearish. And then this gap here couldn't even want to come into it. That is a breakaway gap. We don't want to see this one revisited. So we trade up into this weekly fair value gap here, left the upper half open. That's exactly what you want to see if you're bearish. That's exactly what I was looking for. And then we saw a nice breakdown, and then we get the distribution of the week. As I was covering, I said I would go into SMT here. What allowed me to see the high of the week? Well, again, just like the example I just showed you, I know what I'm looking for, which means what? I'm bearish. I'm bearish on this market. We want to see lower prices. I've been screaming from the rooftops. Don't try to call a bottom. If you do that, you're going to get taken to the slaughterhouse. We're looking for lower prices. We're not trying to fade the underlying weakness. So with that being said, this weekly fair value gap is a level for us to expect what? A reaction, right? Lower prices. So what you're going to study on the hourly chart is there's an SMT with S&P. So S&P did not take out the previous day's high, whereas the NASDAQ did. In and of itself, it doesn't mean anything. But because I'm already bearish, because it's Tuesday going into Wednesday when we expect the high of the week to form, inside of the weekly premium array where we're expecting the market to turn, now SMT becomes extremely powerful to confirm what I'm looking for. I don't need it, but it is a great confirmation to have if I'm already anticipating something like we covered last week. So we got the open high and then distribution to the downside. They stopped it just short of this low here. So I suspect that'll be the next draw going into the new week. Then from there, my attention goes to this liquidity void here. From where we close this candle and open this one, there's been no trading inside that range. So that's the next draw there. And then below that, we have the low and then this low down here. And I'm suspecting we're going to continue cratering on the stock market. Like I said last week, still saying the same thing this week. Absolutely nothing is bullish in stock equities or in the equity market right now. Another thing that I covered, I'll throw this in there. I know I covered it last week, but just something for you guys that are reviewing and looking to expand your skill set. Why were we expecting a large range week this week? Anyone know? Make this an interactive one. Anyone know why we were looking for a large range week this week? There's a little bit of delay, so I have to wait a second. Let's see who was taking notes last week. Last week, inside week. Taj, longtime follower. Yes, sir. Last week, inside week, no doubt. So this previous weekly candle, we had what? A small week. I really like the way ICT explained it to me. I think it was like I can't remember if it was 1 or 2 years ago. I can't remember what mentorship it is in. Consume so much content from the man. Just all jumbles up in my brain somewhere. But when I really like his explanation for it. When you have an inside day or an inside week, right? Because if we know price is fractal, if the logic applies on a daily chart, is usually how we look at it. It also applies on a weekly, hourly, 15, obviously all time frames. So because we had an inside bar last week, one of the things that's communicating to me that I really like the analogy ICT used for it, which is it's like a spring that's compressing. So that spring is compressing and it's eventually going to what happens with every spring that's compressed, it eventually expands. So that's exactly what we expect that next week, is that expansion after that spring has been compressed. So we get a nice large range week, which is predictable if you know what you're looking for. So nice large range week last week because of the inside bar that we had the previous week. Yeah, absolutely, Slim. Taj, dead on. So like I said, these are the downside targets moving forward, and I'll cover a bit more of that on the daily chart. All right, so daily chart, we have this is a short recap. I like to kind of recap the previous week because then that helps us kind of go into the new week and what we're expecting. We had that volume imbalance here as a draw last week that we were expecting, but more specifically, these up close candles here. Simply put, when order flow is bearish, up close candles should act as resistance, right? That's just a simple way to read order flow. That's what I gave you guys last week. However, we're not looking at random zones, right? So what I'm not doing is looking at this whole up close candle, extending it, let me, that background, extending it through and just hoping for a reaction inside of a big range like that, right? We don't deal with zones. We deal with very specific price levels. So if we have this up close candle, which we're expecting to do what acts as a bearish order block, and we have a large wick here, am I going to focus on the bodies or the wick? The wick, right? And why this wick? Because it's the largest wick inside these two wicks here. So you're going to extend that through midpoint here, and then you'll see the bodies stopping there perfectly, right? So I know I gave you the up close candles last week, but that's not very precise because now you're dealing with just a big ass zone, which doesn't really do a whole lot for you. We're looking at very specific price levels inside these key zones. So we have that wick here, and then you can see, look how the market perfectly trades up into it, and it stops there on a dime. And then we quickly displace through it. I was having some folks asking me, so now that we refilled the new week opening gap, are we going higher? No, right? I was very specific with what I was sharing last week, especially in the Discord. If you're not in there, you guys can join for free, and you guys can get updates, things I'm looking at through the week, things my team is looking at, and you guys can join that here through the YouTube chat. But I made a very specific comment last week that we're not just looking for the new week opening gap to fill. We're going much lower than the new week opening gap. Why is that? Because there's sell stops here at these equal lows and there's sell stops here. You guys may not trade like this, but people are actively trying to do what in this market? Call a bottom, right? They're trying to say this is the low in the NASDAQ, it's the low in the S&P, and we're going higher. We're going to take out these equal highs. And that is not the case, right? It's actually the fact that this was just building in a premium, and then these sell stops is going to be perfect counterparty. Because if we were anticipating this, I'm sure smart money, I'm sure the central banks probably knew the same thing, right? The people that actually control the market. So when it's being pushed higher here, right, and they're moving it into a premium, that's allowing them to do what? Sell short, right? A lot of people were trying to call this bottom and buy this rally higher. They're either buying call options, they're buying futures, they're buying stock. So where's the money to be made? Ripping it against them into their sell stops, which would be where? Here and here. The good thing is we don't need to look at any gimmicks like level 2 data, other things to see where the orders are. Look at your highs and lows. That's where the orders are going to be. Very simple. So equal lows here, that was the draw. And then we got just short of that here. So I have some fib projections here. These levels I got off the weekly chart, that red line here, which is that sell side here and here on that weekly chart. But I also have fib projections that I'm using that align with these key levels here. So measuring the bodies of this range here gives me projections on the downside. And the way I use fib projections is I need them to align with key levels that I already expect, right? So in and of itself, from my experience, projections alone haven't been that helpful for me. When I already know what key levels I want to see, then fib projections are aligning with that, these mathematical projections of ranges that we're seeing. And then you get that alignment. I've seen that to yield more fruit, more success from my experience. So these are the levels that we're looking for here on the downside, as long as we continue seeing bearish order flow. This down close candle here, you're going to want to extend this through this week. I don't have this on here, but you guys are going to want to be mindful of it. This is going to be a bearish breaker. So we do not want to see this down close candle traded through. We should not get above this at all. If we do, then I either become neutral or I have to reassess if maybe the market is shifting bullish, but there's nothing in the markets that are bullish right now. And I do not want to see the market get above this bearish breaker here. So that gives a lot of insight for lower prices. So for traders that trade futures, for traders that trade options, right? What you're getting in here is gold, right? Because now you know what's an invalidation level, right? Last week, what was the invalidation level? The market shouldn't get above these up close candles. So now that gives you a whole lot of food for thought with stop placement, entries, option strategies, right? A whole lot you can do with this information when you know how to read the candlesticks and where they're going and where they shouldn't go, right? Because that also helps you with invalidation levels. All right, so working down into the 4-hour chart. You can see a really nice market maker sell model here. So again, last week on Sunday we opened, they push it up into a premium. That builds in an expensive market for smart money to sell into. Breaks down, fair value gap, hits it, leaves it open, and we melt to the downside. The reason I have this 4-hour fair value gap here is because that's kind of like a last line in the sand for me. We should not get above this 4-hour gap if we're going to remain bearish, right? So I want to see us really stay heavy, accelerate through these lows here, and then that'll take us into all these downside targets that we have going forward. And I'm thinking we can't even see NASDAQ in the next few weeks to months in the 17,000s, right? So I think we have much more downside to go on the stock market. For those of you guys that have 401ks, hopefully you guys have been protecting those with the insight we've been given here for free on the YouTube. So with that, guys, that's everything I had. Any questions for me here before we get going? If there's anything related to the analysis, any markets you guys want me to take a look at, I'd be more than happy to take a few of those here before I get going. Justice, last week was the textbook setup. Thank you, Dylan. Still holding major position. Nicely done, Justice. Nicely done. James, I'm late, but glad to join you guys. Appreciate you joining, James. Strat King, great question. Yeah, so why is that a liquidity void? So it's a liquidity void because there's no trading inside that range. So let me go up to the daily chart here. Right, so from where we closed that candle here, where we opened, you'll see it's just one gap higher. There's been no print inside of here. So technically there's been no trading inside this range, which is why it's a void of liquidity. It's a liquidity void because there's a void. There's no trading that has occurred inside that range. And then when you look at it on the weekly chart, you can see we closed here and then we opened here. So there's been no wicks, no transactions inside that range. That's why it's a liquidity void. Yeah, great question. Mind looking at GU? Yeah, it's going to take a look at that. Yeah, so equal highs here, likely on the agenda for euro. And buy side here in play for pound. So it's going to be just a reversal of what I was looking at in the US dollar. So yeah, I'm seeing higher prices for pound, seeing higher prices for euro. Let me go to the cross here, see which one's stronger. Yeah, so I think, yeah, I'd favor euro this week. So if I was trading currencies, I'd favor the euro over the pound. Euro's likely going to be stronger. So for currency traders, give you guys some extra here. I'd look for euro over pound to the upside. Can you take a look at the dollar yen? Yeah, let's go take a look at dollar yen. Yeah, so we're likely going to keep seeing lower prices on dollar yen because we're seeing so much weakness on dollar because dollar is first in the name. That's going to be weak for dollar yen. So what I'll be looking for here for dollar yen weekly chart, taking it from the top, we have this down close candle here. That's a bearish breaker. We wouldn't want to see price get through that. All right, so I like to see how we trade up into it last week, but we do see the market staying in the lower half of that range. That signals weakness here. If you extend that fair value gap through, let me see on a 2-day chart. If you extend, let me see. Yeah, so we couldn't even trade up into that Reaper, so that's really bearish, but I'm not going to get into all those details here. But weekly fair breaker, as long as we stay below that, we're looking for lower prices. Looking at order flows at a more basic level, we do have up close candle respected, up close candle respected. So we don't want to see the market make a lot of ground above these up close candles. We want to see it keep accelerating to the downside. And as long as you monitor dollar throughout the week, as long as dollar does or delivers within our expectations, then that'll make it easier for you to trust your sell models and lower prices in dollar yen. Did they run the stops here? No, but they did sweep the bodies here. So they swept the bodies here. So we should see continued breaking down, or a continued breakdown at least on the dollar yen. So what would invalidate my bearish bias for dollar yen is getting above that breaker. Above that breaker, that's no good for lower prices. All right, so let's take a look at yen, pound, Dow. Let's take a look at the Dow. Dow, same thing. It's going to be a bloodbath in all the stock indices. So same thing with the Dow. I actually covered this for you last week, so I actually remember taking a look at the Dow. So last week for Dow, we had that weekly fair value gap, traded up into that, and then did what? Stayed in the lower half, right? So really nice delivery on Dow. Looking for lower prices, these equal lows here. And then going to the official contract here. Yeah, so we got the sell side here, this low here, this imbalance here, and then these lows down here for the Dow. Alessandro Dylan, so NASDAQ just came out of quarter one, typically the accumulation quarter. That is correct. What if this was a bear manipulation before the yearly bull distribution? Very possible, Alessandro. One of the great things about trading and investing, at least the way in which we're doing it here, or at least the way I'm doing it, is the good thing is hold on, what's going on here? Yeah, I don't get paid for predicting months in the future what's going to happen, right? And the good thing is I don't even need to worry about it. What I'm focused on is what is the next week to month doing. Then once we deliver all these downside targets, if that's a manipulation move, and then we are going to see a yearly distribution and just see a parabolic run higher, the good thing is the market's going to tell us, and it's going to lay it right in my lap because we know how to read price action. So as of right now, absolutely nothing is bullish. Nothing is suggesting higher prices in the equity markets. However, could we see that happen in a month, a week, 2 months? I don't know. I'm not getting paid to analyze that far. So I keep it germane to what is going to pay me, which is what's the bias? What are we looking for as targets for the next couple weeks? Then once we deliver those targets, as I always say, we'll have to see how we trade there for more information. So that's kind of how I'm taking it. But that is a good theory. It is a good hypothesis. It could happen. But the good thing is that it's not going to increase my bank account more or less if I know what we're going to do in 2-3 months. So that's my take on it. The loyalty family, if you were to start Top Step 50K, what advice on daily targets would you look for to pass a challenge and secure a payout? It's a good question, and I wish I could answer it with detail. But number one, I don't get financial advice, and number two, it's so dependent on your skill set. It's so dependent on how much experience you have. Have you passed a challenge before? Have you taken payouts before? Do you have an ability to read price action? Do you have a model? Do you have a trading plan? Like those are all things that are considerations for you developing your risk parameters, right? Because trading high risk for someone that's learning is a recipe for disaster, right? But understanding, like I said, your experience level is really going to determine that. So because I'm not in your head, it just makes it really difficult for me to give you a suggestion. My suggestion is if you're more inexperienced, which is just my assumption because you're asking me here, nothing wrong with that. I started with very little experience and had to learn myself. I would start with the least. And I would just focus on getting consistent. One of the things that you guys will all eventually realize is once you start getting consistent, you can scale that. But if there's no consistency at all because we don't have good habits, then it doesn't matter how much money we make in the short term, we're going to blow it. So the key is to establish habits that are going to allow you to make money steadily and more importantly, allow you to keep it. Because one of the things I've learned is if you make money that you don't deserve, the market's going to take it from you quickly. What do I mean by money you don't deserve? Well, if you gambled, if you over leveraged, if you're not following a model, if you're not following a trading plan and you make money, that money is going to be taken from you very, very quickly. The way you avoid that is you make money with in a repeatable way. What is a repeatable way? Having a model that forms in price action every week by having a trading plan where you're actually managing risk, you're controlling your trade frequency. Because if you do that, that's going to allow you to not only make money, but actually keep it, which is what 95% of traders aren't able to do. Even 80% of the traders I work with are able to all make, but very few are able to keep it long term. And it's because of what I'm discussing here. So that would be my advice. If I was starting a challenge, I would be focusing on those factors right there. US oil. Yeah, let's go and take a look at crude. Let me go to the current contract here. Go to June. All right, so we had that run on sell side here. So these sell stops taken out here on the crude oil June contract. What I would be looking for higher prices here would be how we trade inside this mitigation block here. I'd prefer to see the market stay above that. So as long as we stay above that range, I'm looking for higher prices on crude oil, especially considering that we took out sell side. So watch how we trade here. That's going to give me a great deal of insight going forward, and that's something I'm watching personally here myself. If we get through that, we start to see a rejection, right, and we trade through this up close candle to the downside, then we're likely going to see lower lows on crude oil. So that's what I'm weighing at right now, is actually just looking at crude oil here over the weekend, getting ready for the week. Amy, quick question. Can you share what a PD array is and how you will use it? Top-down analysis and trade entry, many thanks. Yeah, that's a great question, Amy. So what a PD array is it's a premium or discount array. What an array is an array is a sequence of information that algorithms refer to. So what we operate with, the only reason I'm able to go in here, right, predict that we're going to see a high of the week form and then major distribution to the downside. The only way I can do that is because we operate with the assumption that the markets are controlled and they're rigged. The good thing is it's controlled and it's rigged by artificial intelligence. So one of the sayings I say, especially for beginners to kind of wrap their mind around it, Pac-Man. Pac-Man can do what? 4 things. He can go up, he can go down, he can go left, and he can go right. Why can't he go diagonal? Because the coding of the game doesn't allow him to leave those boundaries. So if we understand in a basic way how algorithms, how computer coding works, now apply that to the markets. Think of the markets like Pac-Man. If the market's going to get down into here into that sell side, the market should not do what? Get above that weekly fair value gap I gave you. It should also not get above these up close candles here. So how do we determine what information the algorithm is going to refer to for premium and discount? That's where the premium and discount arrays come in. They come in the way of several forms. There's old highs and lows. That's a PD array. There's inefficiencies. There's fair value gaps, volume imbalances, liquidity voids. There's all types of imbalances. There's order blocks. There's breakers. Those are all different premium and discount arrays. So they're institutional reference points in the market that the algorithm is going to refer to. With that being understood, if we understand these PD arrays, if we've learned how to read price action, we understand how these PD arrays work, we're then able to use that insight and understand, okay, how far can the market go and still be bearish? Once you have that ability to read price action and understand how that comes together, now entries become easy, because this order block here, I don't know how many of you guys trade like that, but you can sell short into that order block. If you're a position trader, right, and you're managing positions on the higher time frame, this PD array here, this weekly fair value gap, can be what? A short entry for you with the stop above the high, targeting these downside levels here, right? So that's essentially what a PD array is, how you use it to read order flow, and how you can use it for entries. The key is you have to know where the market's likely to go. And then once you have an understanding of the draw and liquidity, then you use these PD arrays to read institutional order flow. And then it just makes it really easy to know what you should be doing and what you should be looking for in the market. I'm pretty happy with that explanation. I think even like, for example, some of my family members can understand that may not even understand a whole lot about markets, technical analysis, ICT, price action, algorithmic theory, all that huge umbrella of big words. But once you understand it, it's really not that complicated. If you're just hearing it for the first time, you're like, holy shit, man, what the fuck is all that? Yeah, I can completely understand that. But if you study it, if you put the time into it, it does become very clear with time. Yeah, great question, Amy. Loyalty mind looking at gold and silver. None to look at on gold. Gold is going much, much higher. So as I covered last week, or at least like really the past few months here on gold, the gold's at what? All-time highs. You don't fade all-time highs. So you keep trusting buy models. Very much like I've been saying for the past couple weeks on NASDAQ, we're not trying to call a bottom. You don't want to try to call a top in the gold markets. When markets are at all-time highs, especially with the climate we're in, look at all the uncertainty that's going on in the world, right? I'm not going to go into all that here. They'll probably ban me on YouTube if I start talking about it. But the gold market being repriced higher like this is signaling that a lot is going on behind the scenes. A lot of money is going into the gold markets because people that have a lot of capital have an understanding of what's going on. And they don't want to be holding US dollars. They don't want to be holding fiat. They want to be holding assets that have value and that appreciate in value. So gold's likely going to keep going much, much, much higher. And silver's kind of lagging behind, but still nice upside on silver. Order flow's bullish on silver. I like these all-time highs here at the 35 level. and silver's absolutely ripping. So I'm a big bull on precious metals. Kingsley, what's going on, my man? Hope you're doing good, man. Hope you're still crushing it. Essence, do you think April 2nd will be a catalyst for equities to pump if nothing serious is announced with tariff? That's a really good question, Essence, and that's one of the things I see a lot of investors, traders trying to figure out, right? Man, what's going to happen with tariffs? What's going to happen with the trade war? What's going to happen with all this? And for me personally, I'm going to tell you guys, I'm not smart enough to figure that out. I'm not smart enough to look into all that. I am not a Einstein level macro analyst. And the good thing is I don't need to be to get paid, because if on April 2nd something happens with tariffs, guess what it's going to be shown in? Price action and institutional order flow. So I'm going to be able to see the price charts on April 2nd, and it's going to tell me what it's going to do. So the good thing is I don't have to really get caught up in all that noise, read all these reports, read the non-farm payroll, read just all these things that, in my opinion, is just a lot of noise. Because the fact of the matter is, institutions, there's a lot of people that have that information long before it actually comes out to the public. So I don't think there's a huge edge in that, but that's my personal experience. Not to say people can't make money with it. It's just not something that is effective for me. The good thing is once we get to April 2nd, the market's going to show me its hand, and I'm going to be making money with that information going forward. So that's how I look at it. That's way too much for me to even consider and think about, and I'm probably not smart enough to decipher it. John, how do you look younger now than a year ago? It's probably the face routines my girlfriend's been doing with me. You guys are funny. Jonathan, XRP, would you like those lows of 48 cents or just within the monthly fair value gap? Yeah, let's go take a look at it. Take a look at XRP. Maybe also we got a higher quality camera, so maybe that's making me look extra handsome here today. All right, so what's a good exchange for XRP? I always, Coinbase. Great, we'll use Coinbase. Yeah, so I'm looking for lower prices on XRP. Before I get into the other cryptocurrencies, I want to go to the mommy being Bitcoin, and then that'll kind of give me market breadth, right? Very similar to like if you're trading currencies, you want to have an understanding of what the US dollar is doing, because if you don't know what dollar is doing, you're going to get smoked trading other currencies. Very similar with cryptocurrency, you want to understand what the mommy is doing, for lack of a better word, Bitcoin, right? So Bitcoin, what have we seen here? We've seen the market drop. I wasn't convinced that this was a drop into a discount to continue higher. I was seeing a lot of people were thinking that okay, we're going to drop here in a discount and we're going to keep accumulating and making higher highs. That's a possibility, but I wanted to study how we traded here. We didn't get a strong rejection out of a discount valuation. And then we take that one step further and we look at this large wick here. You'll see the bodies staying in the lower half. That's not bullish, right? So now dropping down into the daily chart, what do we have here? We have a dealing range. Oops. We have a dealing range. Dealing range high, dealing range low. The market traded up into a short-term premium. More specifically, this PD array here of the fair value gap. Extend that through. Look at the bodies here, communicating it's weak, and then we break down. So as long as you remain below this high here, which I'm thinking is an intermediate term high, this should act as a breaker. I'm looking for these lows here and new lower lows on Bitcoin. Ethereum, absolutely bleeding like a pig, going much, much lower. So Ethereum's bearish. Bitcoin is likely following suit. And now with that in mind, we can go into XRP. So let's start taking from the top here on the weekly chart. XRP's been in a bit of a range, but we have this up close candle here. We are respecting that. So that is still signaling bearishness to me. Next draw is going to be 50% of this wick, and then these equal lows here on that weekly chart. Daily time frame. Let's see what we got here. So daily time frame, the key levels that I'm going to be using this week if I were trading XRP would be this breaker here. And then we have this fair value gap here. So we have this fair value gap and breaker. The market should not get above that if we're going to remain bearish on XRP. So I want to see the market stay heavy through this. Sell side here, and then, yeah, well, once we get there, we'll worry about that. And then going up, so you were saying just 48 cents? These lows of 48 cents or just within the monthly fair value gap? Oh man, yeah, 48 cents would be a bloodbath. Yeah, so I'm looking for that monthly fair value gap. And then what we'll go ahead and do, Jonathan, is we'll have to see how we trade there, right? So one of the things that will be helpful is, let's go to, let me see the weekly chart. I haven't looked at this market before, so it takes me a little minute. Yeah, so what we'll go ahead and do is we'll just take it step by step, right? So we know what we're looking for on the daily chart to confirm bearishness. What I'll have to measure then is inside this weekly gap. I'd want to see if we're going to remain heavy. We'd want to see it sell off and a body laid over that consequent encroachment or 50%. That would signal weakness. Then we'd want to see this gap using it as an inversion. And then that would tell me if we're going to get down into these levels here. So very similar to what I was saying for the stock market, just taking it week by week, month by month. That's where I find the most success. So then once we get down here, we'll be able to use that information and see, okay, are we going to remain bearish or is it just going to accumulate the stops and continue higher? And that's something I'll have to see if and when we get to those levels that we're looking for. Eric, hey Dylan, so NASDAQ sell side levels aren't matching up to yours. The red lines on your chart when comparing the NQM to the NQ1 contract, you covered the preference. Right. So looking at the continuous contract here, these are the levels I'm working with going into the new week. If you're using the continuous contract, they may be slightly different. So for macro perspective, like if I'm looking at like a monthly chart or higher, then there's nothing wrong with the continuous contract. Then we have these equal lows here, right? So that's what I'm looking for. However, I'm going to chart on the current month contract, and these are the levels I'm working with here. So that's what I'm going to be using in my trading going forward. You know what? I forgot to cover what I was going to share with you guys. All right. So high of the week last week. How did SMT allow me to do that? Because I was kind of already in the mindset of SMT because I was making that presentation here yesterday and actually used the same tool here this very week. Right? So the market traded higher into that weekly fair value gap, and we're expecting the market to turn. How do you use SMT? Well, there's bullish SMTs here as well, right? There's a bullish SMT down here. So SMT in and of itself isn't that helpful. But if you know what you're looking for, which is lower prices from that weekly fair value gap up here, and then you get an SMT divergence, right? We did not get a higher high here on S&P, whereas we did here on the NASDAQ, right? So SMT inside of a key level when I'm already bearish just makes it a lead pipe cinch trade. Slim, I got a bit thrown off by us closing above the new week opening gap, missed the SMT, but I learned every week, next time I'll be prepared. That's the right mindset, Slim, right? When I first started trading, most of the time, this stuff would just go right over my head. But now as we get better, as we improve, as we journal, right? As we dig into our charts and we study them every single day, naturally your attention starts to get keyed up on these things. And then what happens over time of doing that for weeks, months, and then years? Naturally, it's just going to become instinct, right? And you're not even going to have to think about it. You're already going to be processing that information and you're not going to be missing it. So it's completely part of the process. Don't beat yourself up if you miss these things. I did many times early on. But what I do, I kept putting in the work, kept my head down, stayed on the grind, and anything's possible. Loyalty, do you have any fundamentals on why BTC is melting down? Fundamentals? Not really. Fundamentally, for me, everything's in the charts. So order flow is bearish. I'm sticking with that. And those are the tools that I use. There could be justifications fundamentally for why it's doing it. But like I told you guys, I don't think I'm smart enough to figure out fundamentals. So I stick with what works, reading the open, high, low, and close. The price charts tell me everything I need to know. Benson, I want to ask, going back to what you said, inside week or inside day, if we have an inside week, this simply indicates accumulation of orders by smart money and possible distribution soon. Yes, sir. Everything starts from consolidation, profile of price delivery. From consolidation, we get expansion, then the whole game starts. Absolutely. Black Panther, so if we have an example like we have right now, where the market, so not viewable. Yeah, so if we do get into a situation, as you were mentioning on NASDAQ, where, for example, let's look at the weekly chart, where we get all the way down here into the 17,000s and there's no price action, then I will look at the continuous chart, and then I'll use that information there. Yeah, that's what I'll do with that. Kingsley doing great, planning to milk Apex. There you go, man. Skincare from the lady doing the job. Yes, sir. Yes, sir. You guys are funny. All right, guys. Appreciate you joining me here today. Hope you guys have a phenomenal rest of your Sunday. I've already been here a little longer than I wanted to. Not that I don't want to hang out with you guys, but I got a full schedule here on my Sunday. So with that being said, guys, stay safe. Have a good weekend. And I will see you guys hopefully for a live trading session here this week if I'm able to handle business on my trading side, and then I'll be able to make some extra time available for you guys. We'll get on the YouTube for a live trading or live tape reading session. So with that, guys, stay safe, take care, and I'll see you guys on the next one.